Good afternoon. Amid escalating geopolitical tensions and Trump's renewed tariff, global markets are sounding the alarm. Gold prices have skyrocketed to a record high of $3,500 per ounce, signaling a seismic shift in investor confidence. Sovereign wealth funds and pension giants from Asia, Canada, Australia, and the US are flocking to safe haven assets like gold as bond yields falter and stock volatility surges. With de-dollarization efforts accelerating and currency wars looming, analysts warn this economic realignment could herald Cold War II. Is gold becoming the new geopolitical leverage, reshaping power dynamics for decades to come? Welcome to Think Tank.
Our world is becoming unhinged.
Welcome back. The Economic Times has reported that gold prices surged past $3,500 per ounce, driven by political uncertainty and monetary policy concerns. The news outlets said that the rally gained momentum after U.S. President Donald Trump criticized Federal Reserve Chair Jerome Powell, fueling invests or anxiety. The Economic Times also added that experts predict further gains with key support levels at 3,450 and 3,400 while targeting 3,600 as the next milestone. What the Economic Times described as historic rise underscores gold's role amid economic turbulence. So far this year, prices have climbed nearly a third, reflecting global instability and waning confidence in traditional markets. Investors now await insights from upcoming Fed speeches to gauge future policy directions. The news outlet said that other precious metals also saw significant movement. Spot silver held steady at 32.68, platinum rose 1,971.4, and palladium jumped to 1.8% to $944.27. This broader trend highlights shifting investor strategies amid escalating geopolitical tensions. Now, according to the Washington Post, gold prices surged to record highs amid global economic uncertainty. Investors' anxiety stemmed from President Trump's trade wars, tariffs, and threats to remove Fed Chair Powell, rattling markets. The IMF cut global growth forecasts, with the U.S. outlet slashed to 1.8% this year, contrasting a 12% S&P 500 drop. The rally highlights gold's safe haven appeal amid geopolitical tensions, central bank demands, and inflation fears. The Washington Post has revealed that analysts link this surge to Trump's erratic policies and double-about Fed independence. While gold diversifies portfolios, critics warn of volatility and risks in unregulated markets. Gold's upward trajectory reflects both opportunity and uncertainty in an unpredictable financial era. Global uncertainty is driving investors to gold, with price surging past $3,500 per ounce. Is this a sign of economic instability or the start of a new economic era?
Global markets are sending a clear signal. Uncertainty reigns supreme. Gold prices have surged past $3,500 per ounce, marking an unprecedented shift as investors flee volatile areas and escalating geopolitical tensions. This surge reflects not just market turbulence, but also a profound realignment in global power dynamics. Sovereign wealth funds, W Analysts attribute this trend to fears of inflation, Trump's aggressive tariffs on China, and de-dollarization efforts by nations seeking alternatives to US-dominated financial systems. China's accelerated gold purchases coincide with strained US-China relations, signaling potential use of gold as both an economic shield and geopolitical weapon. Strategy reminiscent of oil politics. Trump's tariffs on Beijing and other nations have intensified trade wars, raising concerns about a looming currency conflict. Such measures could destabilize global currencies, further fueling demand for gold as a safe haven. Experts warn that these actions echo early signs of what some term Cold War 2.0, where economic competition replaces military confrontation. As institutional giants diversify away from volatile equities, bond yields remain under pressure while stock markets reel from policy-induced shocks. Traditional portfolios risk obsolescence in this new era, shaped by central bank policies and investor caution. The flight to gold signals more than financial instability. It highlights a world grappling with shifting alliances, rivalries, and landscape. Gold emerges as both a barometer of fear and a tool of geopolitical leverage. Could this be the dawn of Cold War 2.0? Only time will tell.
Providing more analysis about the gold prices and its wider from Washington by Mr. Meher Nicholas Fazeli, World Bank former advisor and the director of Forum, and Mr. Peter Tanis, economic expert and chairman of Linux Investments Advisory. Good evening to you both, gentlemen, and welcome to Think Tank. Mr. Fazeli, let's start with you. And with global prices surging past the $3,500 per ounce, what does this unprecedented rally reveal about global investor confidence and fears of a potential second Cold War?
I'm delighted to join you today live from the IMF World Bank spring meetings in Washington, D.C. And apologies for the technical issues, but these are the circumstances of live connections. It's a very good question. So clearly, we're witnessing the birth pangs of a new era. So it's like a woman who's suffering, the world economy or financial markets are like a woman in child labor Spain, right? And this is the first phase of that new Cold War, pitting Beijing against Washington. And it's having a big impact on financial markets across the board. And it's having a big impact on asset classes. And so gold, precious metals in general, and gold in particular, they constitute an asset class alongside currencies like the dollars or the euro, etc. And we collectively have forgotten about that in the past 50 years because, for 50 years, the world economy was very much defined by the neoliberal order, open markets, free trade, trust, confidence. And now we're shifting away from that into a more volatile, more form of, cynicism, which you could call, the age of geoeconomics. What does it mean, geoeconomics? It means the old frontier, the old borders separating the world of finance, the world of economics, and the world of national security, military strategy. all these nice borders are collapsing, and we're witnessing both in Washington and Beijing a convergence of national security, finance, and economics into one unified field. There is gold, which is rising for many reasons. To make it long story short, the first reason is quantitative easing. It's the delayed, sadly for us, the delayed impact by central banks of 13, 14, 15 years of monetary complacency. Really, from Washington to London to Frankfurt, the most banks complacent because they printed money for 12, 13, 14 years, and they gave it a fancy name. They called it quantitative easing. We're now paying a price for that, a delayed price for too many central banks printing too much money. Another reason, more recently, is really President Trump's presence in the White House, which accelerated existing phenomena. So inflation was there long before President Trump entered the White House. Inflation started creeping in 2-3 years ago. But clearly, the fact that there's an acceleration of the new Cold War, pitting China against America, a trade war, all that is prompting big asset owners, and that would be the world's largest investors, which are a handful of pension funds, very large pension funds from Canada, US, Australia, Holland, the UK, and a handful of sovereign wealth funds and central banks from China, Saudi Arabia, Abu Dhabi, Singapore. These are the world's largest investors, and they're buying more and more gold. It's a very slow process. But when you have a little more demand will rise steadily, supply is fairly limited. So all that put together means that we have entered a golden era for gold.
Mm-hmm. We'll speak about turning to gold again, but let me here go to Mr. Tanis. And Mr. Tanis, amid the skyrocketing gold prices and the volatile equities, are traditional investment portfolios becoming absolute in this era of geopolitical uncertainty?
No. Nice to be with you, Mona.
Thank you.
Let's put this in a safe haven for thousands of years. They don't talk about Tesla and Apple and other stocks in the Bible. They talk about gold in the Bible. So it's been around for a long time. There is no major happening here. It is cyclical. When there are problems in the world, people turn to gold. Many of the problems today, as the other guest has pointed out at some length, have to do with the economic chaos started in Washington. Now, is it going to last? No, it's not going to last, because President Trump sees what it's doing to his ratings, and he's not going to let that happen. Number one, Trump backed against Fed Chairman Powell by saying, "Oh, I'm not going to fire him." Second, he said, "Oh, we're going to have really constructive talks with China," and you can predict that he's going to suspend some of the tariffs walks are going on. Why is he doing this now? Because the market was collapsing, because he can't afford. There is no major secular change happening here. It is happening because of the circumstances created by the economic chaos, and it will self-correct.
Oh, yes, indeed. We're not speaking about a secular change, but rather we're speaking about the trade-off statements and the change of statements that occurred and that changed the markets. I'll get back to you again here, Tanis, but let me go to Mr. Fazil. And how might Trump's tariffs on China and other nations escalate into a currency war, and what implications could this have for global trade and financial stability? And what is, or how did the statements of President Trump, as respectively said Mr. Tanner, this the market?
Great question, and I'm going to reply to your question and make a quick comment on what Mr. Tanner said earlier. So what he said about Chairman Powell and the trade war with China, these are like things which happened in the past days, right? But gold started to rise before the White House and before the open trade war with China. And of course, in the past 24 hours, precisely, it seems that President down the tensions between him and Chairman Xi Jinping in Beijing and with the Federal Reserve Board in Washington, D.C. But these are short-term fluctuations, and they will not have an impact on the price of gold if you are a long-term investor. So once again, long-term means pension funds, sovereign wealth funds from one of these 9 or 10 pension superpowers. They don't listen to what Trump or they make. And if they have decided to allocate more to gold strategically, it is a long-term decision. Now, why? Because there are things which are bigger than just Chairman Xi Jinping in Beijing and President Trump in the White House. There is a phenomenon. So there are things which are going to happen anyway, whoever is in the White House. And the press, tends to blame President Trump for a lot of things, etc. A lot of things are happening regardless of who is actually the US president. And the main thing is the Chinese if it's a Democrat, a Republican, a neoliberal, a neorealist. So the only thing which are specific to President Trump, I think, is the acceleration of the acceleration. So President Trump and his advisors, who belong to a school of thought called neorealism, they figured out that, that new Cold War with China was coming in, that the techno-industrial financial rivalry with Beijing was there anyway. And they said, it's there anyway. Instead of being victims of it, let's try to be actors of that change, which will happen anyway. And I think from that perspective, they're right. So they entered that trade war. Now, the implementation of their liberal program, if you will, was gave the impression that they were a little disorganized, because you don't fight a war on China at the same time on Mexico and Canada and Germany and Europe. And I think that was the mistake. White House.
Fazeli, it's clear what you're saying here. We do understand what you mean here, but what you're saying here is that clashes were to happen at any moment. So they just accelerated with the issue, right? Mr. Tanis, what role do world central banks' policies play in driving the current surge in global prices, and how sustainable is this upward trajectory?
Well, they're a very large purchaser of gold. And let me be clear, everybody should own gold. It's set to most other things that they own. It's been a pretty popular investment for thousands of years. Central banks buy gold periodically, and they may indeed be buying more now. It's also a reflection of the fear of inflation. Gold is something that one tends to want to buy when one is concerned about inflationary pressures. And there is inflationary pressures going on right now. So it's important to put this again in context. The world has been concerned for some time about inflation. More recently, in the past few months, they've been very about President Trump's tariff policies, which seem to contribute to inflation. And Trump is now many of the tariff ideas that he's put out there and trying to soothe markets. As we can see from today's stock market, it's having a positive effect, and he knows this, and he will act accordingly.
Mr. Fazeli, let me get back to you here. And as the sovereign wealth funds shift towards gold, is the world witnessing a broader de-dollarization trend that could reshape international finance?
The short answer is yes, to some extent, but it will take time. So I think, the dollar will remain an important reserve. Out about it, but for like 70 or 80 years, it was a very dominant, an extremely dominant reserve currency. So basically, of banks and sovereign wealth funds, if you look at the cash allocation, it was very much 70, 80, 90, 95% US dollar. So that kind of a huge dominance is declining in the asset mix. So it's always in finance, we look at things in relative terms. So it's never absolute, it's always relative. And so that's why gold is offering a relative attraction. So gold in itself may be worth zero, right? The reason why central banks and sovereign funds and pension funds are allocating more to gold is because they believe the relative value of gold will keep on rising because inflation is there to stay. And more than inflation, geoeconomic risks are there to stay. Russia seemed limited to a small, boring, uninteresting part of Central Europe, which is the Donbass Valley. But it had huge.
What we need to understand here, our world markets, is the international finance system turning to gold instead of the dollar? This is exactly what we mean here from the question.
Partially, yes. So the answer is yes, partially. It's not 100%. So what I'm coming at is sovereign funds, central banks, pension funds. Now their allocation to gold on average, if you look specifically at sovereign funds and pension funds, is maybe 1.5, 2%. It's rising. It will keep on rising steadily. Central banks will go 5, 6, 7% in some cases. It will also keep on rising. It's not going to 90% or 100%, but in that asset mix, diversify. The only way to manage risk is to diversify. So in that logic of limitation risk, diversification, gold, a physical asset, you can store in the vault of your sovereign fund at home, will keep on rising to maybe 15, 20% of the overall allocation, and that will take 10 years. So it will be a slow process.
Right. Mr. IMF's lowered growth forecast. How much of the global economic slowdown can be attributed to Trump's erratic, or so they described it, the world's financial systems, those erratic trade policies and tariff war?
Trump's economic policies have created economic chaos, and he deserves most of the credit for all the problems that we're having right now. And the slow, any related to the effects of the tariffs on business worldwide. Business people are traumatized because how do you build when you have tariffs that come and go almost daily? This is not a sane way to conduct foreign policy or economic policy, and it will change. investment. Gold is, of course, not going to replace the dollar as a reserve currency. The dollar is used in international isn't, and then the dollar is used to invest in securities that pay a return, more specifically U.S. Treasuries. What will probably happen is that as a result of the chaos and inflation, foreign investors, Japan, China, and the others, will demand higher interest rates from the United States. And that could happen. That also has a very negative effect on world commerce.
Right. Unfortunately, our time is out here, and that was Mr. Meher Nicholas Fazeli, former World Bank advisor and director of Washington Forum, and Mr. Peter Tanis, economic expert, chairman of Linux Investment Advisory. Thank you both, gentlemen, for your very special insights and valuable discussion. Now, gold's historic surge to, as we said previously, $3,500 signals a world grappling with geopolitical tensions, trade wars, and de-dollarization fears. We remain to see what will be coming next. That brings us to the end of today's episode of Think Tank, which always unveils the complexities of our changing world. Many thanks for watching, and stay tuned for more coming up on Qnews.